Hi, my name is Sushmita and I will be presenting question number one, which is about the benefits and limitations of using analytic procedures at the planning stage of an external audit. At the planning stage, analytic procedures are useful because they help auditors identify high risk areas where errors or fraud may occur. They also highlight unusual trends or changes in financial information, help auditors understand the business better, and allow them to focus time and resources on the most important areas. However, analytic procedures also have limitations. They do not provide strong audit evidence on their own. They depend on the accuracy of the company's data and they may not detect small or subtle misstatements.
Next, I will discuss whether the external auditor can rely on the work of Larissa Weems. First, the auditor must consider her objectivity. Larissa was appointed by the finance director, which may affect her independence because she could feel influenced by management. There is also no evidence that she reported her findings those charged with governance. In addition, she resigned before completing her final report, which raises doubts about whether her work can be fully trusted. Second, the auditor should assess her competence. Although Larissa managed to identify several weaknesses in internal controls, there is no information about her professional qualifications or experience. Her inability to complete the final report may suggest that she lacked of sufficient skills, time, and resources. Third, the auditor should consider whether she used a systematic and proper approach. While some controls review were carried out, the absence of the completed report and supporting documents makes it difficult for the external auditor to review or rely on her work. Finally, the control weaknesses identified are serious. Issues such as ordering metals before customer approval and failing to reconcile suppliers' statements increase the risk of errors in trade receivable and trade payable. Therefore, due to concerns over objectivity, competence, and incomplete work, the external auditors should place a little reliance on Larissa Weems' work and should perform their own audit procedures. Now, about Den Hyde. First, the group's auditor must consider the firm's professional competence. Since Den Hyde is an external audit firm, it is likely to have necessary knowledge and experience. However, the group auditor should still confirm this before relying on their job. Second, the independence of Den Hyde must be assessed. The firm must be independent of Nevermore and comply with ethical requirements. The group auditor should obtain written confirmation of this independence. Another important factor is the significance of Nevermore to the group. As Nevermore was acquired during the year, it is a new component and may involve higher risk, such as acquisition, accounting, and intragroup transaction. If Nevermore is significant to the group auditor may need to be more involved in the audit work. The group auditor must also evaluate the scope and quality of the audit work performed by Den Hyde. The work carried out must be sufficient and relevant for the group audit purposes, and the group auditor may need to provide clear instructions on high risk areas. Finally, communication and access are important. Den Hyde should communicate any significant audit issues and allow the group auditor access to relevant working papers. In conclusion, if these conditions are met, the group auditor may rely on the work on Den Hyde. However, the group auditor remains fully responsible for the final group audit opinion.
Moving on to question 3, here we analyze a specific internal control deficiency identified by the internal auditor, Larissa Wim. I will be covering the first two deficiencies regarding supply statement and IT security and outlining the consequences disposed to Init Ltd. Part A is the supplier statement not reconciled. First, let's look at the failure to retain or reconcile supply statement with the payable ledger. This is a critical control gap with five major consequences. The first is the material misstatement of liability, where without reconciling, Init risks failing to record invoices for goods received. This leads to understated trade payable and cost of sale, which ultimately give a false picture of higher profit in the financial statement. The second one is the risk of duplicate payment, where the lacking verifications against the external statement increases the chance that the finance team might process the payment twice or pay incorrect amount, causing unnecessary cash outflow. Third, we have a foreign currency errors, Since any use global supplier, missing invoices mean we might miss foreign exchange differences, leading to incorrect calculations of exchange gain or losses. The fourth is strained supplier relationship. If payment dispute arise because our record the don't match the supply, they might place Init on a stop list, where this halt the supply of essential metals and causes production delays. Finally, there is an increase of fraud risk, where reconciliation is a key independent check. Without it, it is much easier for staff to process fraudulent invoice without detection. Moving to second deficiency, the failure to regularly update antivirus software. For a design-focused company like Init, the risks here are severe. The most direct threat is the loss of intellectual property, where Init relies on bespoke design, where a malware attack could corrupt or steal this unique file, forcing the company to completely redo design work and delay the project completion. This leads to significant operational disruption. A ransomware attack could lock the entire IT system, including ordering and design. This would bring the production workflow to a standstill and result in a missed delivery deadlines. Next is reputational damage. If a breach exposes sensitive client data or pricing structure, Init could face a legal action. More importantly, it will damage trust with high-end hotels and restaurants, deferring future completion. Lastly, considering the cost of remediation. Recovering from a virus is expensive. Init will incur high costs hiring IT specialists to clean the system and restore the data, which directly impact profitability. That's covered the consequences for the first two deficiency. I will now pass it to the next presenter to discuss the remaining issue.
Thank you, Adriana. Next, I will explain the consequences of ordering metals and starting production before obtaining customer approval. Firstly, there is a risk of uncoverable costs. If a customer later cancels the order or disputes the agreed designs or price, and it may not be able to recover the material and labor costs that have already been incurred. Secondly, this practice can result in unusable or obsolete inventory. Since Audit produce bespoke light fittings that are tailored to specific customers, incomplete or finished goods cannot easily be sold to others, which may lead to inventory write-offs. Thirdly, there is a revenue recognition risk. Without formal customer approval, the contract may not meet accounting recognition criteria, increasing the risk of premature or incorrect revenue recognition. Finally, there is a risk of misstatement of inventory and work in progress. Costs related to unauthorized commission may be incorrectly capitalized as inventory or work in progress, overstating assets when future economic benefits are uncertain. Alright, now we will move on to the next one. The next, I will discuss the consequences of not providing protective clothing to employees. Firstly, this represents a breach of health and safety legislation. Failure to provide legally required protective equipment expose any to fines, regulatory penalties, and possible legal action resulting in additional costs and required disclosure in the financial statement. Secondly, there is a higher risk of workplace accidents and injuries. Without proper safety equipment, employees are more likely to suffer injuries, which could lead to compensation claims, increased insurance premiums, and the need to recognize liability provisions. Thirdly, unsafe working conditions can lead to reduced employee morale and productivity. Employees may feel unsafe or undervalued, resulting in higher absenteeism, increased staff turnover, and also lower production efficiency. Finally, repeated health and safety failures can cause reputational damage. Negative publicity may weaken relationships with customers, suppliers, and employees, ultimately affecting its long-term sustainability and financial performance.
Hello sir, my name is Kavimala Parameswaran and now I'm going to explain about question 4. The question 4 asking us to justify why the item listed by the engagement partner have been identified as the key areas of audit risk, and for each item describe the procedures that should be included in the audit plan in order to address those risks. You should present your answer using the following subheadings: A. Trade receivable, and B. Trade payables. I'm going to explain about trade receivable. First, we look at justifying the key areas of audit risk. First point is rapid increase in trade receivable by 117.29%. This significant increase raises risk of overstatement due to uncollectible or doubtful balances, errors in accounting receivable, and also inappropriate or premature revenue recognition. Next point is about rapid growth in commission. This may put pressure on credit control procedures, which result in customers being granted credit without proper assessment. It also increases the risk of irrecoverable debt. Moreover, long production period between customer commission and dispatch. This increases the risk of cut-off errors, which may lead to premature recognition of revenue. The last point is about customer complaints due to quality issues from new suppliers. This may cause disputes and delayed or non-payment, which increases the uncertainty of collectibility of receivable. This also have risk that easier allowance is understated. Now let's talk about the audit procedures to address the risk. So the first point is significant increase in trade receivable. For this, they can perform analytical procedures to compare growth in receivable with revenue growth, or also can investigate unusual and unexpected movement. Next, the auditor can also obtain and review receivables aging analysis, which is identifying long outstanding balances for further investigation. The next point, which is about rapid growth in commission, may the auditors may review credit control policies, which is assessing approval and monitoring of credit remarks. They can also evaluate adequacy of expected credit loss, which is ECL allowance. The next point is about long production period between customer commission and dispatch. The auditors can perform cutoff testing, which is inspecting dispatch notes and shipping documents around the year end, or they can also trace sales invoices to dispatch documentation. The last one is about customer complaints due to quality issues from new suppliers. The auditors can review customer complaint records and credit notes by identifying disputed receivable balances, or they can also ensure disputed amounts are excluded from revenue or appropriately provided for. That's all from me. Thank you.
Assalamualaikum and hi, I'm Anna Batrisha, and now I'll continue with question 4, where I will talk about why trade payables are considered as a key audit risk for ANIT. So first of all, ANIT started using several new suppliers during the year because demand has increased. So since these suppliers are new, ANIT may not yet have proper routines for handling their invoices. So this will increase the chance that some invoices are recorded wrongly or even not recorded at all. Then another issue is that the internal auditor has found that supplier statements are not being kept or reconciled with the payables ledger. So without doing these reconciliations, ANIT may miss some supplier balances, which could actually cause trade payables to be understated. And then the case also mentions that ANIT buys metals from suppliers around the world and they invoice in their own local currencies. This creates foreign exchange rates because the amounts need to be converted correctly at every year end. So any mistakes here could lead to incorrect trade payable balances. And lastly, because ANIT received lots of commissions, production has also increased, which means that more purchases were made. So this will increase the risk of cut-off errors, where liabilities relating to goods received before year-end are not recorded in the correct period. Okay, now we will continue with the audit procedures that the auditor should have planned in order to deal with the risk. So firstly, the auditor should prepare a reconciled supplier statement. This is to help the auditor identify if there is any missing invoices or unrecorded liabilities, especially because ANIT does not do this reconciliation currently. And then the auditor should also review payments that have been made after the year end. So if ANIT paid suppliers shortly after 31st December, it usually means that those payables has existed at year end but were not recorded before. And then the auditor should also retranslate and convert the foreign currency payables using the correct year-end exchange rates to make sure that overseas supplier balances are accurate. And then finally, the purchase cut-off testing around the year-end should be done to help confirm that trade payables are recorded in the correct accounting period.
For question 5, I will explain what should be included when briefing junior audit team members. First, the audit objective and scope should be clearly explained so junior auditors understand what areas are being audited and how their work contributes to the overall audit. Next, the specific audit procedures must be outlined so they know what tasks to perform and how to carry them out correctly. Then, key audit risks should be highlighted to ensure juniors pay extra attention to the area with the high risk of errors or misstatements. After that, reporting and communication procedures should be clarified so any issue or unusual findings are reported promptly to senior auditors. Finally, professional conduct and compliance should be emphasized to ensure juniors follow auditing standards, act ethically, and maintain confidentially.